Now, Coinbase stock is facing its worst quarter since the FTX collapse, sparking potential buy opportunity. Coinbase's stock price plunged nearly 50%, occurred alongside broader U.S. stock and crypto market downturns. While the drop may appear to offer a compelling entry point, investors should be cautious before assuming the stock is undervalued. Coinbase Global has had ups and downs since its NASDAQ listing in April of 2021. The company quickly became the largest publicly traded crypto exchange, catering to retail and institutional investors. In 2024, Coinbase reported impressive revenues of $6.3 billion US dollars, more than double the amount from 2023. Most of these revenues stemmed from transaction fees, $4 billion, with the remainder coming from subscription services, including offerings like stablecoins and crypto staking. That's pretty bad. Look at that chart. However, the crypto market has been through a rough patch recently, contributing to a significant decline in Coinbase's valuation. As a result, its stock is now trading at a relatively lower price to earnings ratio of 24 times and an enterprise value multiple of 11.7 times based on 2026 earnings estimates. Yet, as with many crypto companies, Coinbase's earnings are highly unpredictable, mainly because they depend on volatile prices and trading volumes of crypto assets. A key factor in determining the firm's long-term value will be its ability to diversify its revenue streams, mainly by reducing its dependence on transaction fees tied to the fluctuating market. While Coinbase has potential for growth, it will need to adapt to make its revenue model more stable. And here's the thing about it. We have more options. It comes down to Phantom Wallet. The ease of use of Phantom Wallet for onboarding without being tied to a centralized exchange and its increase in downloads compared to your traditional cryptocurrency exchange applications like crypto.com and Coinbase is a direct impact to this. So you want to ask me why this is happening? It's because you can onboard crypto without going through crappy exchanges that rob you with their fees, and people that are getting into crypto now are going directly to a decentralized version. And if you really wanted to onboard, you can use things like PayPal and Coinbase now, so you don't even have to go through any of these exchanges, and you can get straight into decentralized markets without ever touching this. And because the trend has been meme tokens on Solana once again, most of the liquidity is going straight through Phantom and not hitting any of these centralized exchanges. Other than like the old heads that still have the apps loaded on and are waiting to buy Trump token on crypto.com or Coinbase, it's really less of an impact. It just is. And I think that this is just a reflection of the shifting landscape for cryptocurrency and the move towards directly onboarding in a decentralized manner without having to go through a third party, which was the entire goal of cryptocurrency in the first place. So congratulations, we're going the right direction as far as that's concerned, right? Coinbase is currently trading at 24 times the price to earnings ratio at 11.7 times, blah, blah, blah. We read this already. This is a significant drop from a month ago when its share price was nearly 50% higher at $298. The current multiple is lower than that of key exchanges like NASDAQ, ICE, and CBOE, reflecting the volatility of Coinbase's profits. However, the company holds $4 billion in net cash and is expected to remain cash generative. Consensus estimates around $2 billion annually for the next 2 years. This steady cash flow makes it a good candidate for estimating its fair value using a discounted cash flow model, DCF for short. DCF valuations are sensitive to assumptions like revenue growth, volumes, pricing, and competition. Finamize analyst Russell Burns mapped out 3 potential scenarios for Coinbase's future: a base case, bull case, and a bear case. The base case assumes 29% revenue growth this year, followed by 15% growth through 2026 and slower growth thereafter. This scenario suggests Coinbase's fair value is around $197, which is near its current trading price. Assuming a crypto market surge, the bull case could see its fair value rise to $400. My argument would be, just in general, that the bull case would not be as impactful as they think it would. I would cut that down to 300 to 350, right? Because at the end of the day, onboarding into crypto is not going through Coinbase and crypto.com anymore. It's evidently by downloads metrics on iOS and Android going through directly through Phantom Wallet now. And that's just how it is these days. In the bear case, with stagnant growth and regulatory challenges, fair value could drop to $80. That's massively low. This highlights the importance of the volatile crypto market in determining Coinbase's valuation. Despite these variations, Coinbase's stock is heavily influenced by crypto prices, particularly Bitcoin. The company's stock has historically moved in sync with Bitcoin, which will likely continue. However, due to high expectation, Coinbase's stock has underperformed this year, despite increasing crypto volatility. Factors like lower rewards and custodial fees and missed expectations for inclusion in the S&P 500 have also contributed to its recent struggles. Over the past 3 months, 20 Wall Street analysts have provided 12-month price targets for Coinbase Global. The average price target is $330, with a high forecast of $475 and a low of $195. This average target implies 81% potential increase from the current price of $182.95. The most recent long-term forecast predicts that Coinbase's price will reach $200 by mid-2025, followed by $300 by mid-2026. In 2028, the price is expected to rise to $350, $450 in 2029, $500 in 2030, and $600 in 2033. Now, here's the thing. I'm going to say it again. We are not seeing the same increase in the price of Bitcoin influenced by the halving that we've seen in the past. And seeing that we are running out of steam for this bull market and the effects of the halving cycle, and 2026 projected to essentially begin the next bear market, if we're still going off of the halving cycle, which, because fees have not met parity with block reward, is probably going to be the case. I would say that I would more likely be inclined to short Coinbase stock than to buy and hold, or hold it as a future, right? So that's just me. I don't play around in the stocks other than having a 401k. And that's kind of how I see it, right? Obviously not investment advice either. It's just my kind of thoughts as far as like, will you see $300 in mid 2026? No, because mid 2026, I think we're going to start to see downturns in the crypto market based off the halving cycle. Could I be wrong? Yeah, maybe we are breaking out of it completely, and the entire landscape shifts and changes, and everything goes in a direction that we've never seen before. Completely possible, but I don't know. WX2 in chat says, the things I have to spend Bitcoin on, I use the Lightning Network with Speed Wallet and Cash App, for example. Other things, gear, rigs, I pay for with Litecoin. People need to start looking at least, start using at least some of it. Yes. And like I said, when I was looking at like some of the posts from Satoshi on like the forums, and one of the things that had been brought up was this idea of governments and corporations holding Bitcoin and hoarding it all. Well, when you hoard it all and nobody else is using it, well, the value of that asset goes down because nobody's using it. And that seems to be a danger for Bitcoin and the wider crypto market at this particular time. Just is what it is, right? And hash rate's going to an all-time high. People were expecting a bull run that did not hit the expectations. And I think that once again, it's just another reason why tariffs are not going to be that large of an impact on US-based crypto miners at the end of the day. It's all going to be energy cost. So if the Trump administration gets energy costs down, win for US-based mining and loss for everybody else. And that will be the story that we read in a couple years. If energy prices continue to rise, we do not stand up and re-energize the old coal plants and start moving into, nuclear and bringing our cost of energy down stateside. That will be the largest indicator and impact on Bitcoin hash rate on stateside mining operations over anything else. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.